Hello, everyone, and welcome to today's webinar, where we will be looking at sole proprietorship and LLC business structures. We get a lot of questions about which structure is best for certain types of businesses. So we're very lucky to be joined by some experts who can help us out today. So a few details first. We will be recording this session, and we'll send out an email with a link to the video so you can have access to the material later. We also welcome your questions, so please type any general questions you have into our questions tab at any time, and we'll leave some time at the end to address those. If your questions are very specific to your situation, we encourage you to make an appointment with one of our consultants to dive deeper into those specifics. And I will put a link to our scheduling page on our website here in the chat. So I'm Hannah Curtis. I'm a coordinator with the North Metro SVDC, and I'm so happy to introduce to you our presenters today. We have Samantha Peaslee, attorney with Polaris Law Group, Lauren Kmetz, CPA with Antora CPA, and Scott Hughes, insurance broker with Day Larson Peterson Insurance. So thank you all for being with us today and sharing your insights. I will turn it over to you now.
Thanks so much, Hannah. And thank you, all of you, for coming today. We know that you all have a lot to do. Small businesses always have a lot to do. So we appreciate you being here with us. This webinar today is based on request. Lauren and I did a webinar a few weeks ago on how to organize your business, and there were a lot of questions about the comparison between sole proprietorships and LLCs. So we're back and trying to do a much closer focus on just those business entities, their legal structure and their tax structure, as well as some concerns about insurance. So legal disclaimer here. This is not legal advice. None of the three of us can provide you legal advice. The materials and presentations are not meant to be legal advice. You should always talk to an attorney. You should always sign up for a personalized consultation about your specific situation before making any of those legal decisions. Similarly, I am not an accountant or a tax attorney. I'm pretty sure Scott's not an accountant or a tax attorney. And I'm pretty sure Lauren says the same thing that I say with legal advice. None of this should be considered tax advice. This is very general tax information, and you should always consult with an accountant before making any tax decisions. Lauren, is that right?
Exactly. Yep. Individual, this is just for educational purposes today, and get some individual guidance on your situation before taking any action.
Perfect. So now that we've got that out of the way, let's talk a little bit about entities. So we have, I'm not supposed to say legal on there, I'm not sure what happened to it, but in creating a company, there are your legal formations. Oh, there it is. And then there are your tax formations. So how you are legally, I'm not sure why it's doing that, but that's okay. How you are formed legally is not necessarily the same as how you're formed tax-wise. So legally, you have 4 general options as to how you can be formed. Sole proprietorship, limited liability company, which are the 2 that we're talking about today. And then the 2 that we're not going to be discussing today, but that are also there, are partnerships and corporations. However, as you'll see on the tax side, the LLC doesn't come up as far as that goes. Your tax formation capabilities are under Schedule C, which is your sole proprietorship or your single member LLC, partnership, S corporation, C corporation. So when we're talking about the entity types, it's going to be a little bit different from the legal to the tax side. Lauren, anything else to add on this slide before we go into the others more specifically?
Yeah, just that really we're going to deep dive this Schedule C taxation today. So that's for sole proprietors or single member LLCs. We'll get into this a little bit more if you have an LLC with multiple members, and that would fall under a different tax structure like a partnership, S Corp, and C Corp. Be sure to watch that other video that's out there in more detail of comparing those entities.
Great. Thank you. Oh, I see what happened. Okay. So to start with, you have a sole proprietorship. And when you're considering what kind of entity you should really be considering 3 categories of things. You should be considering your formalities, meaning how much work do you have to do to keep the entity valid, to keep the entity as being considered what you're saying that it is. Should be considering the liabilities, meaning how much responsibility are you, the owners, taking on within that company, and you should consider your taxes. And these 3 things will help you determine what kind of entity you have. Now, sole proprietorship, legally speaking, is the easiest kind of entity. Tax speaking, it's also the easiest kind of entity. If you are selling something on Etsy, if you have a lemonade stand, if you have just offered to paint your neighbor's house, you are now a sole proprietorship. So you'll see in this formalities area that there really aren't any. There's no organizational documents necessary. There's no EIN necessary. There's very centralized management because it's just you. You're making the decisions. So anytime you're entering into a business for yourself, you're not working for somebody else as a W-2 employee, the automatic default is a sole proprietorship. For reference, and we're not really talking about partnerships today, but if you're doing the same thing with another person, you're going to be automatically considered a partnership, and a general partnership at that. So those are kind of your default functions. No formalities are required. But the risk going into this liability section is that you have full liability. When you are a sole proprietorship, you and your company are one and the same. You're not considered 2 separate. You are considered a single entity. So if you have a company and you know, you're on your phone and kid falls out of the tree and breaks their arm, and because you're a sole proprietorship, they don't have to worry about what money is in your company or not. They can attach your car for those medical expenses. They can attach your house for those medical expenses. And Scott will talk to us a little bit at the end on how we make sure that first you have that insurance to cover it. But that is the risk. If you either don't have insurance or if insurance doesn't cover it, you are considered one and the same. Anything that happens in your business will affect your personal life. You also will have limited capital because you're not going to have any investors or funders. It's just you. So Lauren, how about the taxes? How do sole proprietorships get taxed?
Yep, so like you said, this is the default. So in the eyes of the IRS, if someone starts making sales, they have a business that's classified as a sole proprietorship. So this kind of entity does not have a separate business tax return. This goes on your individual tax return, whether you're single or married. It's on your Form 1040. That's your annual tax return. There's just another page that gets added to that. That's called the Schedule C. And that's where you report the business, the gross revenues from sales, and then expenses by category to calculate the net profit or the net loss from the business. And so this being a sole proprietor, sole meaning solo, if this is you, this is how you're taxed, and you get to keep all the profits. That's one of the bonuses. If, like Samantha said, if you are doing this business with someone else, then you're not a sole proprietor, then you are a partnership, in which case that is a separate business tax return that would need to be filed for the partnership itself. That's Form 1065. So just make sure that if you've got someone else, someone that's not your spouse specifically, to get that partnership return filed. So as a sole proprietor, when you complete your tax return every year, this profit from the business is subject to your federal income tax at whatever tax bracket you and or your spouse are in, and our state income tax, as well as what's called self-employment tax. So self-employment tax has different names. Some people call it payroll tax or FICA tax. What this is Social Security and Medicare tax. In total, it's 15.3% on your self-employment earnings. And so people always wonder, they hear about paying quarterly taxes. So when you do that, you don't have to file another tax return. It's not like you're filing a tax return every quarter. You're making payments to the IRS and to the state every quarter, If you don't pay it in every quarter, they like to penalize you and charge you more money. We don't want to give them more money than we have to. So that's the importance of paying those quarterly taxes. So if you're just starting a business, it's pretty safe to set aside, you know, minimum 15 to maybe 30% of your profits every month and make sure you're paying those in quarterly. And then when you do your tax return, that's generally due before April 15th, you will true up. If you owe more, you'll pay more after you file. If you owe less, if you were getting less tax than you paid in, you get that back as a refund.
So then I lied a little bit. You do have one formality as a sole proprietorship, and that's making sure that you pay those quarterly taxes.
Yep.
But other than that, it's about as easy as it can be. So with that, then we have a limited liability company. You'll see there's a lot more text on this page, which should give you an idea that there's more involved with it. This is not a default. And in fact, a problem that we see often is people start a limited liability company, but they're not doing it correctly, so they're not actually a limited liability company if anything goes wrong. We get to do what's called piercing the corporate veil and consider them a sole proprietorship. So a limited liability company has more formalities associated with it. So you can choose how you're being managed. You can be member managed or manager managed. Now, if you're considering being a sole proprietor or limited liability company, so there's just you, the odds are good that you're going to be member managed. You're going to make all the decisions still. You're going to just have everything come up to you. We do see sometimes manager managed if, say, spouses are partners in a limited liability company and one is really in charge of the day-to-day and the other is just there for support. We might also see it in a solo limited liability company. If you really aren't in the industry so much, this is your idea, this is your baby, but really you want somebody else to run the day-to-day. That would be a reason to have a solo owner limited liability company that is manager managed. But most of the time, if you are a single owner limited liability company, you're going to be member managed. You're going to be doing it yourself. You do need some documents. You need to have an operating agreement, which is the contract between yourself and your company. You need to have an organizational consent that says that I understand that I'm solo, but I am still creating this organization and here's what I'm allowed to do on behalf of this organization. That's usually wrapped up with your first annual meeting minutes, but then you need annual meeting minutes after that. That's not just your filing with the Secretary of State. That is the fourth thing you need, filings with the Secretary of State, whereas a sole proprietorship does not have to file with the Secretary of State. But you also need annual meetings to kind of do those checkups and show that you are in fact acting like a limited liability company. You're acting like you and your company are separate. You are the owner of your company, but you are not your company. Very important when we get into liability for that one. So if you're not willing to do those 4 formalities, probably limited liability company is not the right fit for you. Now 4 is much less than any of the corporate formalities. This is a modified version. Operating agreements don't have to be that long. Annual meetings, you have them with yourself. A lot of people feel a little bit funny about that, but what you do is you read through your operating agreement and you say, is this all still effective? Yes. Oh no, I need to change that. You go and you change that, you make that amendment, that's your meeting. Or you read through your contracts if you have contracts and you see, like, did this all work this year? Are there changes that I want to make? Meet with your accountant and say, hey, what was my profit this year? Can I set a budget? How much should I be setting aside for next year? These are all questions that you have to ask as a business owner. By doing them in your annual meeting and recording them, you're showing that you consider yourself separate from your business. Similarly, you also need to keep your finances separate. You should have an EIN. You should have a separate bank account. If you are putting money into the company, it should be as either a loan, meaning that you get paid back slowly over time, or as an investment, meaning that you're not planning on getting paid back right away, but you're getting profit for it. You shouldn't just be using company credit card for personal expenses and vice versa. You need to be reimbursing yourself for that. Otherwise, you're not acting like you're separate. Limited liability companies may also have Securities and Exchange Commission considerations or registrations, but that's only once you're starting to bring other people in. So if you are a solo limited liability company and you're thinking of bringing other people in one day, do talk to an attorney about your securities potential, but don't worry about that too much right now. And then also you have to determine how you're going to vote or make decisions. Again, if you're solo, that's not that big of a deal, but you may decide that, well, any purchases over $1,000, I need to record that. I need to have a special meeting so that I can then come back and see what the reasoning is. You may say, well, anything that I do that's a financial decision, I need my accountant to sign off just so there's a second person there. Anything that's a legal decision, I need my attorney to be present at the meeting. So you can make those kinds of determinations. All of those formalities are so that you can get what's called limited liability. So we said sole proprietor, you're here, you're one and the same. The reason you want a limited liability company is so that you are here and your company is here. That way, if little Timmy falls out of the tree and breaks his arm, there's a wall there. And we like to call those formalities walls. So we want at least 4 of those walls there so that they can't reach through those walls and get your car. Now, if you haven't done those formalities, there's no walls, somebody can reach over and grab you. We call that piercing the corporate veil. You don't have walls, you just have this thin little veil, they can go through. Think three little pigs and the big bad wolf in there. Stronger your house is, the better it's going to be. So if you follow those formalities, the only thing that you can lose, and this is why we call it limited, the investment that you've put into the company. So there's no guarantee that you can get that investment back. You may lose that entirely if something goes wrong in the company, but other than that, it stops there. Similarly, if your managers, if you have those, or officers, if you bring in officers, or you, the member, act in good faith and in the best interest of the company, you won't be personally liable. If you're not acting in good faith, that's not going to hold. But to the extent that you're doing the best job that you can, you're also going to be protected from personal liability, not just as that member of the company, but as an actor within the company. Also, with a limited liability company, you will get more access to capital than you would from a sole proprietorship. So if you need loans from banks, if you're looking for investors, although if you're looking for investors, let's talk about the Securities and Exchange Commission filings. You may be able to have individuals who come in and work for you for profit. So there's a lot more flexibility with a limited liability company. So Lauren, what about taxes for a limited liability company?
So for a single member LLC, so one owner, I would repeat everything I just said for the sole proprietor. They are taxed the same. So not a separate business tax return. It's on your individual 1040 with that extra Schedule C page showing the business profit or loss. You also get to keep all the profits, and you're still subject to that 15.3% additional self-employment tax on the federal side. So same thing here is if the LLC is owned by multiple members, that makes it a partnership. That is a separate entity with a separate return that needs to be filed on the Form 1065. Another distinction here is that an LLC can elect to be taxed as an S corporation. This is not a default by any means. You have to file a form with the IRS to be treated as that way, and then a separate business return would need to be filed. It's a little bit more complex and more regulations you need to consider. But if you're just single member LLC, it's the same as that sole proprietor. And so on that note, when Samantha touched on getting an EIN and keeping separate business finances, that is more important at this LLC level, although I do recommend, even if you are a sole proprietor, doing that anyway. So once you become an LLC, you can get the EIN, that stands for Employer Identification Number. That's basically a business's social security number. That allows you to get a segregated business bank account. And in the structure, you want all business income and expenses flowed through that bank account. But even if you're a sole proprietor, I recommend getting a separate business or a separate bank account, even if it's a personal account, So you have segregation, one for ease of record keeping, so you know that these are business expenses, and two, in the eyes of the IRS or the state, that you're not considered commingling funds from business and personal. So it's always just a good habit from the beginning to keep those records separate.
Great, and especially with growth. So with a limited liability company, since you can make those other elections, you can grow a lot within a limited liability company without changing that legal structure. Remember, that's that difference between legal structure and tax structure. So if you're very growth oriented, a limited liability company might be a good place for you. But always talk to both your accountant and your attorney before determining your pay structure within your LLC. So, or within your LLC, or even just within your business, how you're getting paid on things, just to make sure that you've gotten everything recorded correctly, that you're taking advantage of any of the tax situations available to you, that you have the correct documentation. So do always make sure of that. Other considerations when considering which of which of those businesses to go with, certain types of businesses may be better fits for different structure. So if you have employees, or if you're planning to have employees, you may be a better fit in one business than another. If you're planning on bringing other people in, you may be a better fit for an LLC than a sole proprietor, because you're going to change from a sole proprietor to a partnership once that happens. Whether you're willing to keep up with those formalities that I've listed. If you have that LLC and you aren't doing the formalities, you're actually a sole proprietor. So you've spent more money to be something that you're not. And then there may be other considerations as far as what other taxes and things like that you have to file. Lauren, any other considerations to bring up when deciding whether to be a sole proprietor or an LLC?
Yeah, just to be aware of any other tax filing or collection and remittance obligations that your business may have. One is sales tax. So if you're selling products and certain services or bundles, may be subject to sales tax, in which you're obligated to collect from the customer and remit to the state, city, and or county. And all those rules are different. So you need to make sure that you're well versed in what your responsibilities are. And same thing with state taxes. A lot of us are web-based businesses. We're doing, commerce in many different states. Do you have a reporting requirement if you're making money in a different state, or if you're doing only your business in your state? So worth checking out. And then I will say, just on the LLC side, just because we looked at, since those entities are taxed the same, it's really just that administrative step of getting the LLC set up and keeping up with those requirements, but they're really not much, and it's very low cost to get this set up. A CPA or an attorney can file that articles of organization for you with the Secretary of State, and it's very low cost to maintain. And it may seem like a lot of record keeping and all that we're talking about, but it's really not much at all. So if you are waffling between these two entities, strongly consider the LLC, and just know that it's not as much as a headache as we might make it sound like.
And I think that's a great point, and that benefit in there comes in that risk level. So if you aren't doing something that's terribly high risk, if you're selling homemade necklaces, the additional protections from an LLC are not going to be as important to you, but it's also not very hard to get those done. I mean, it's that outset setup and then the once a year obligations as far as the annual meetings go and the Secretary of State goes. Whereas if you're in a higher risk, if you're doing anything with food, if you're doing anything with kids, if you're doing anything with topical anything, if you're going into people's houses, all of a sudden you're looking at much more expansive risks, and it is definitely worth the couple of hours a year to do those formalities to protect your house, your car, your spouse's income, your other income if you have a second job, your savings. So since the tax treatment is very similar, those really are going to be the things that you're looking at. which actually is a really good segue into Scott. Let's talk about some risks.
Yes, let's talk about risk. So yeah, I'm Scott Hughes with DLP Insurance, independent insurance broker. So I represent a lot of different insurance companies, but the things I want to touch upon regarding the LLC or sole proprietorship, again, it comes back to the administrative side of things. And when you're getting your policies and getting your coverage in place, it can be a lot easier if you do have it set up as an LLC. Most insurance companies will still insure you if you're a sole proprietorship and you have a DBA, for instance. That's not the issue. You just have to make sure your policy is insuring you for what you do and what you say you do. So 3 policies or areas of coverage to consider when you do have your business in place. The big one and the easiest one to get is general liability insurance. Depending on the type of business you have, it might be as simple as adding a business endorsement to your homeowner's policy, and that's probably going to be your cheapest route if you don't want to hassle with getting a separate business owner's policy or general liability policy. Again, talk to your homeowner's insurance carrier. They all handle it a little bit differently, and they all charge a little bit different for it. Some will insure a wide range of businesses, others are a little more limited. So again, if you are getting a general liability policy under your individual name or your sole proprietorship with your DBA, just make sure you notify the insurance company of your DBA, or if you add one later down the road. It just helps to make things easier when there is a claim. And it does protect you for things like property damage, personal injury, things of that nature to third parties. That's the whole intent of general liability. It can also extend to lawsuits that could be brought against you for advertising injury that includes slander, libel, accidental copyright infringement, something, you overlook something, you post it on social media, and now you've got some big company coming after you. So that's one reason general liability is worth having. The next would be workers' comp insurance. Now, this is something mandated by the state. You're supposed to have it anytime you hire somebody, even if it's a part-time 1099 employee. The Department of Labor is still going to care if that person gets injured under your direction. Let's say they're working out of your home, they come in for 8 hours a week and do work for you. You can still be on the hook if they get hurt while doing work for you. So be careful around that. A lot of people think they can skirt around it by doing a 1099. They consider their employees independent contractors. There are ways to do that and to do it the right way. You should talk to your insurance agent about that and how you can kind of avoid that liability or that risk. Because if somebody gets hurt, even if it's just tripping on their own 2 feet, but they're doing work for you, they could still make a case against you that you're responsible for all their medical bills and loss of wages while they're recovering. So the final one I want to touch on, and there's a whole lot of other stuff I could talk about, but these are kind of the big ones, is business auto insurance. So whether you register your cars in your individual name or you want to write off a new car purchase under your business name, that's a whole different subject I don't want to get into. But if you are registering it under an LLC name or your business name, what have you, make sure that your either personal auto policy has a business use endorsement or that entity is listed as an additional insured on your personal auto, or you can go a whole different route and buy a business auto policy or commercial auto policy to cover the entity in that vehicle. If you do have an accident, even if you're just running some errands for the business and they find out that it was registered under a business name, you can, you're just gonna have them coming after you for a lot more than just maybe what they would normally, if they're just like, oh, it's somebody in their, personal auto policy and they've got state minimum limits, which don't recommend that, but make sure you have good coverage there because they will try and take you for all you can, even if it's just a little, oh, my neck hurts a little. So that's kind of the world we live in now, unfortunately, but that's why you got to make sure you're covered. And remember, you don't have to be a really big business to be sued like one. So that's why insurance is helpful. It prevents those accidental things from ruining your sleep and your financial situation, because a lot of people lose a lot of sleep when something goes wrong, and we don't want you to be in that situation. So reach out to your insurance agent if you're not sure what you have or what's available to you. So yeah, that's all I've got.
Well, and to add to that, just so that everyone kind of knows how these work together here, as an attorney, we can do our best to make sure that you're in the best position to win if you get sued. I can't say that we're going to make sure that you win, but we can help you build up those walls to make sure that you are protected. But we can never stop you from getting sued. And insurance may be able to pay for that process if you do get sued, if you have insurance to cover what that is. So it's not if you have insurance, you can forego the legal. And if you have legal, you can forego insurance. They work together as far as those things go.
Well said.
Yeah, thanks. So just because we do get that confusion sometimes. And I did also just want to bring up, because Scott mentioned this and I hadn't said anything about this one yet, a DBA. So a DBA is not a business entity. A DBA is saying doing business as, and the legal filing that you do for it is a trade name. Well, a trade name is just a nickname. So my name is Samantha. My legal name is Samantha. That's my name. I go by Sam. So that would be the equivalent of you saying that your legal name is Joe, and that your business name is Joe's Java. That's your nickname. So a DBA, you're not creating a new legal entity. It's just saying this is what I am known by in the business world. So you can have an LLC that has a legal name. You can say Joe Smith LLC, and then you can have a DBA as Joe's Java, or you can just be Joe Smith and have a DBA, have that trade name, and have that be Joe's Java. So a trade name, it has no legal standing as far as that goes whatsoever, but it is a filing that you can do to make sure that people know that that's what you're going as. So I wanted to bring
that. I'll touch on that if one more minute. So another benefit of the LLC and getting an EIN for the business is a little bit of anonymity, and protection of your social security number. So if you're doing contract work for someone and they ask for a W-9, they're going to issue you a Form 1099. If you're a sole proprietor, you're going to put your social security number on all these forms. Whereas you're an LLC, if you've got an EIN, you can put the business name and the business EIN rather than your social getting all over the internet and being exchanged on these forms. So that's just one extra benefit. If you're a child care provider, you have to give the parents, statements, and it would be, better protection for you to have the EIN rather than your social.
Also a great point. Scott, Lauren, anything else to add, or should we ask Hannah for questions?
That's all I've got.
Yeah, I could go on and on, but I don't know. We haven't talked about cyber liability or professional liability, or there's a whole lot of stuff, but
plenty of kinds of insurance out there.
Yeah.
Great. Well, thank you all. Yeah, that was super helpful. And we did have a couple questions come in. So on the insurance side, if someone already has an insurance policy, general policy, as a sole proprietor, and they want to make the shift to an LLC, what are the considerations on their policy they need to think about? Will they need a brand new policy, or can they, just adjust the policy they currently have?
Yeah, it depends on the insurance company they're with, but 9 times out of 10, most insurance carriers can just do an endorsement of the existing policy. So it should be a relatively easy process for most carriers and most policies. Yeah.
Great. Good to hear. Another question, can you have 2 managers with an LLC? You touched on that, and the question is if you can split it like a 50-50 responsibility for managers with an LLC.
You can absolutely have co-managers of an LLC, and that's what you would call them then, as co-managers. If you're going to be splitting responsibilities, though, you might want to be looking closer at officers. So the way it goes is the members own the company, and if you have managers, they have the least responsibility in the day-to-day. And then the managers are chosen by the members, and they have more responsibility on the day-to-day. But then if you have officers are like president, treasurer, secretary, or CEO, CFO, CIO, or, you know, queen of the world, king of taxes. So you can call them whatever you want. There's no legal indication on the name. But then those officers, what happens is the managers can delegate away responsibilities to those individual officers. So if you're wanting to look at kind of delegating those responsibilities like that, it might be worth discussing officer positions rather than co-managers and then designating what each manager does, because technically still both managers are going to be responsible for both sets of things. So even if internally you say we're going to delegate these things out, at the end of the year if something goes wrong, both managers will be responsible for all of that. So if you're really looking at that delegation, you know, we can talk about how to split into some officer roles instead.
Great, thank you, really helpful. Another question, so the end of the year is coming up. Seems like that would be the easiest time if you were to make a transition from a sole proprietorship to an LLC for tax considerations. Is that the only time you can make that shift, or what would it look like if you needed to make that shift during a tax year?
I'm glad someone asked this question because I was gonna hop in and answer it anyway. So since these two entities, the single member LLC and sole proprietor, are taxed the same, there's no change in the taxation. So really you don't have to wait till the end of the year. You don't have to wait at the start of the year. You can do this at any time. You could do it today or tomorrow. So if you're ready to pull the plug and go ahead and do that, really any time is great. The only other difference is if you were looking at going to an S Corp, which we're not covering here, there may be a better time to do that, but just sole prop to LLC anytime is great. So you might as well get it done if you're in a slower part of your year, because your tax accountant and your attorney probably are. So.
Great, thank you. Another question, a scenario question here. If two people who are marketing consultants want to work together with one client or clients, is it best to form a partnership together or work separately and have their own companies?
Oh, good question. Well, so either way, whichever you decide, you should absolutely have a contract, because if you don't have a contract, remember I said partnerships are automatic. If you start working together and start splitting money and you don't have a written explanation as to how you're doing that, congratulations, you now have a partnership. So it's best to sit down and figure out how you want to do that. Typically, if you're doing it for a single client, we recommend having some sort of contract in place where one is the primary and the other is a subcontractor. One is the primary contact with the client, the other one takes direction from that first one, is a subcontractor, and then you pay them as a subcontractor. If you're truly both working with them together, it might just be best to have the client contracts with the client, and the client just gives you permission to communicate with each other on the issue. And sometimes it might act, if you're doing this regularly, you're doing it with significant numbers of clients, it might be best to either create an ongoing contractor relationship, again, with one as the primary, one as the sub, or to then create a partnership specifically for the things that you're doing. But either way, whichever way you decide to do it, you just have to make sure that talk to your attorney, talk to your accountant so that you know where the flow of funds are going, who is responsible for what. Also good to talk to insurance about that to figure out what kind of insurance you need to cover your contractors, subcontractors. So I know that didn't give a straight answer as to the scenario, but I will say that if you wanted more specific answering details on that one, please do feel free to set up a consultation with any one of us. So.
Great, thank you. One more question we have here on the insurance side. Is there a time of year that's best to make the shift with your insurance policies if you're shifting from one business type to another, or adding on a different type of insurance to your policy, or can you do that at any time?
No, you can do it at any time. I mean, ideally, the best time to get insurance is before an accident happens. Before your house is on fire, you want to have homeowners insurance. I mean, that's really the best time. So there's really no time better than now. So yeah, I would say, yeah, because, and there is some other considerations too. Some policies are occurrence based and some are claims made based. So just another thing to keep an eye out. Occurrence based, a claim has to happen or occur during the policy versus claims made where the claim has to be made during the policy period. So, or the lawsuit or what have you. So there, yeah.
Great, thank you. Really helpful. So another question, what about two family members working on the same business, for example, a mother and a son? What would the best arrangement be?
So that's going to be a very personal question. That's going to change from business to business. So that's absolutely going to be a set up a consultation to answer on that one. But I will tell you, you're not a sole proprietorship at that point.
And I will chime in on the insurance. So in general, most policies will cover a spouse automatically without them having to be, but it doesn't always cover other family members. So if you're in business with a brother or a sister or something, and yeah, so another reason why you should have an LLC or anything else other than a sole proprietorship in that case. So
Yeah, same on the tax side, so that relationship would be a partnership by default. So getting your contracts, your partnership agreements all set up, it may seem like you don't need it if it's a close family member or a friend, but things can certainly get messy in those relationships as well. So making sure on the upfront side that you're making sure you've got all those contracts, you figured out contingency plans, if there's certain things happened, what we're gonna do. And it may just talk you out of having that family business in the first place, but maybe once you get everything sorted out, you'll be ducks in a row and feel more confident about the way the business is run.
Great, well, thank you, that's really helpful. Last question we have here is on the insurance side. For someone who is working from home as a marketing consultant, what insurance would you really need for your business, or what would you recommend?
the two areas that I would consider if I were that person would be professional liability, because you're giving a lot of advice to your clients, and sometimes that advice may backfire or turn into something where that client is going to turn around and sue you. So that's the professional liability. That is not included in most standard general liability policies. It's excluded. The other one would be cyber liability insurance, and that covers a wide range of things, including everything from ransomware to somebody posing as you. They've hacked into your stuff and they start sending emails or messages or anything posing as you, and then it causes you a lot of damages. So those are some of the things that you should consider for anybody working from home, really, in this day and age. But anybody who's a consultant of any kind, professional liability is really the first thing they need to consider. That's even more so than general liability, in my opinion, unless they're going to a lot of site visits or visiting offices or anything like that.
And remember with that, it's not just when you give advice that is misconstrued or mistaken. It can also cover advice that you never gave that they claim that you did. Because
that's called errors and omissions.
Yep. A lot of
that's
people
also professional liability.
That advice. It doesn't matter.
Right. Likewise.
Yeah. Never bad advice.
Great. Well, thank you so much. Those are all of our questions right now. So you all explained this so thoroughly. So thank you so much. Is there anything else, any last words of advice you'd like to leave our listeners with?
Come into the SBDC if you have other questions, or if you have more specific questions. We all love, you can tell, we all love chatting about this, and we're happy to kind of break down your more specific scenarios offline. So absolutely, if you feel like you had other questions, set up a consult with Hannah, and she'll get you over to whoever you need to talk to.
And document. Documentation's great. Everybody hates doing it, but comes in handy when you have a claim. So keep good records.
Oh. Yes, great. Thank you. And thank you for that, Samantha. Yes, and a question just came in asking if the SBDC offices are open. Our physical location is not open, but our consultants are doing their meetings over the phone or virtually. So I put that scheduling link in the chat, and you can visit our website to find that as well as to find a list of all of our consultants and their bios. That's northmetrosbdc.com. So please visit us online, and if you have other questions, we're happy to help. And thank you so much for joining us all today. Thank you, Lauren, Samantha, and Scott, for all of the information, and we wish you all a great rest of your day.
Thank you so much. Bye, everyone.
Thank you.